Today, I have the absolute privilege of having a guest who is a titan in the financial services industry, voice in the Indian economy, alumni of IIM Ahmedabad, Rashesh Shah. The nation is faced with many challenges today. Settling of the trade war and the Gulf War or the Iran war. Faced with maybe the monsoons, El Nino. We're clearly not on the right side of the capex cycle, given the overhang of services and the impact that it could have on job creation or the loss of it. The equity markets have been sideways.
There have been what I call the paradox of India. In India, whatever you say is true, but the opposite of that is also true. India is a great movie to watch. India is a drama country. India grows when you go to sleep. And the Bombay Stock Exchange Index was 680. Today it is more than 100x.
What are the opportunity areas?
I am getting very bullish on manufacturing.
How does AI impact us?
The first capex cycle started with LLMs. Then it moved on to computing chips and memory. The third one will go into infrastructure, where you create large computing infrastructure. India is not behind.
Great part of this conversation is that you nailed and explained in India. Welcome back to the episode of Frankly Speaking with Viral. Today, I have the absolute privilege of having a guest who is a titan in the financial services industry, someone who has built up an organization ground up, started with humble beginnings in 1995 with a few people together, and today has built an organization which is enviable. He is a voice in the Indian economy, an alumni of IIM Ahmedabad, and is an advocate of mental fitness, a marathon runner. Please welcome Rashesh Shah. Rashesh bhai, thank you very much for taking the time today.
Thank you, Viral. Absolutely excited to be here. Thank you very much for this.
Rashesh bhai, there are so many things that we can sort of talk about, but I thought to begin with, I think the nation is faced with many challenges today. Last year in June, I think we were all sort of looking at this settling of the trade war, and perhaps we have a trade agreement, and that I think was sort of getting finalized in early part of this year, and then you had the Gulf War or the Iran war. We are faced with perhaps what's going to happen, maybe the monsoons, El Nino. One can argue, but we are maybe on the wrong side of the capex cycle of artificial intelligence. The equity markets have been sideways since September, October of 2024. And I thought your opening comments and thoughts on where we are and what is it that lies for us, and how do you see the markets panning out?
Yeah, I think the only advantage you have, I've been in the markets now for 36 more odd years, and the only advantage you have is you have seen many cycles. So, but each one, when the cycle is either up cycle or down cycle, it always appears that this time it is different, and this time. So currently, the biggest issue that a lot of people have, as you said, oil, capex, AI, India is out of favor, at least amongst global investors. And in the last 30 years, I've seen India has been in favor and out of favor, but this has been as extreme being out of favor as I've seen in the last 30 years. So it does seem like currently the chips are down, everything is going wrong for India, oil price, current account deficit, rupee, India's own capex cycle, agriculture, El Nino effect. But if you go back and study over the last 35, 36 years, there have been 5 or 6 such phases in India. And each time it has never been one thing, it has been multiple things. It's almost like a perfect storm where this and this and this and this is going wrong at the same time.
Can you give us some example of that? Because that is what creates hope. That is what creates for us to, and we were discussing, and you said how the Indian economy in rupee terms sort of doubles every 6 years and in dollar terms in 8 years. So if you can give us some example and tell us, because that is the ray of hope, what lies ahead.
So if you go back and see, I mean, I think historically, there have been what I call the paradox of India. There has been, and there are quite a few quotes on that, where somebody said, India is a complex country where the optimist and the pessimist both are happy.
Wow.
There is other quote which says, in India, whatever you say is true, but the opposite of that is also true. And it is true. We are a large country with a 4 trillion economy, but our current per capita is, about $3,000. So we are a large country, but also a very small country, $3,000 per capita. So at a per capita level, we are very small and insignificant also. But at a 4 trillion, we are among the top 5.
At an aggregate level, yes.
Countries. So India has its own contradictions. India has its own complexity, nuances, and as I said, for last 35 years, the optimist and the pessimist all have been happy because things have worked in India, but a lot of things have not worked. So to illustrate that, I think if you look at India from 1982 onwards, the economy has doubled every 6 years in rupee terms,
Wow.
which is a 11-12% GDP, nominal GDP growth in rupee terms, which it has achieved. And India has actually doubled every 8 years in US dollar terms, which is about 8.5% kind of a growth adjusted for US dollar. So we have achieved that. And we have, so I remember in 82, we were about $100 billion as a GDP. In 1990, we became 200 billion. In 98, we were 400. In 2000, we became 500 billion, which was the first time people said retail banking, when you cross 500 billion, consumer banking and all grows, and it started growing.
Right.
HDFC Bank and ICICI Bank all started flipping along. Then in 2008, we hit $1 trillion, where people said now malls and airports, and that is where we saw, Phoenix Group and malls starting
Right.
to develop. Airports started coming up everywhere. So in 2008 we were 1 trillion, 2016 we were 2 trillion, 24 we hit 4 trillion. Now obviously the rupee has gone down, so we are stuck at that. But the fact is, if from 1982 we have doubled every 8 years in dollar terms and every 6 years in rupee terms, I think this trend will continue. It may go a little bit up and down. So maybe instead of every 6 years, it will become 6.5 years.
Sure.
Maybe instead of 8 years, it will become 8.5 years. But whichever way you do math, India will be a $10 trillion GDP by 2035.
Wow.
And a lot of our hypothesis is based on that. Now, maybe we'll become 10 trillion in 2036 or maybe 37. एक दो साल आगे पीछे it can happen.
Sure.
But I think this trajectory will not. So India is a great, as you know, they say India is a very bad snapshot, but a great movie to watch. So if you see India over 30, 40 years, it's a very stable country. Look at our GDP has hovered between 4% to 8% real GDP. Our inflation has been also, around a 5 plus or minus 2%, 3% up and down. Our rupee has also, average depreciation has been 3%. So over 40 years, India is very stable. But the paradox of India is that every quarter, it looks very volatile. Every quarter, some drama is going on. And India is a drama country. But when you step back and look at the data, there is growth happened. When I started my career in 1989, the Bombay Stock Exchange Index was 680.
Wow.
Today it is 75,000 odd here and there.
Yeah.
So it's been more than 100x. So the market has given a 14% per annum return over almost 36, 37 years. So a lot of parameters are very stable on a long-term basis. So I remember when Edelweiss turned 25 years old, we internally were speaking to our employees and we said we are 25 years old and we are 100 quarters old. Every quarter has been chaotic and volatile, but the 25 years have been great.
Super.
So it's the perspective. So in Edelweiss we call it having a bifocal view. You have ability to see the short term and the long term. Short term in India is always filled with chaos and drama and problems, some problem or the other, and I'll illustrate that. But the long term somehow seems very stable, and it's like some economists have said India grows when you go to sleep because you don't see the growth.
I mean, what quotes you've given us, what great opening, fantastic. I mean,
so, 30 years ago, there was chaos on the road, there was honking and construction going on. 30 years down the line, we are same place. But it is a 4 trillion economy. We have all been beneficiaries.
Absolutely.
So
Absolutely.
India mein growth heavy and continuity bhi wahi hai. So you have to keep that in mind.
So it's like perform, you are, if you can perform for today and transform for tomorrow, but India is definitely happy.
Absolutely.
Right.
Absolutely. We always say have the bifocal view.
Yeah.
Ideally, keep a 30% focus on the short-term drama and keep 70% focus on the long-term opportunity in India. So India short-term, everything looks very pessimistic. You get very demoralized.
So if you're looking at the Instagram reel, that's not great. But if you're looking at the border movie, 3 hours.
If you see India very closely, you will only see the bad parts of India. When you take a distance, the good things of India. And that is why you need a bifocal approach to India. And that is what a lot of foreigners, a lot of Indians also, we all struggle with that because unfortunately, even with our eyes, we try to look there, we don't look here. We look here, we don't see. So here there is always some keychard and all that. And it's real, it's not artificial. So you can't ignore this. You have to navigate through this. You have to go through the keychard to get that, the opportunity and the pot of gold that is there.
Wow.
And actually, this is what we train our leaders in, how to be bifocal. Navigate the short term, but look at the long term opportunity and try and balance that very well. So I remember we started Edelweiss 30 years ago. That was, immediately after that was the
Liberalization.
That was just after liberalization, everything was hunky dory. We started Edelweiss on a euphoria. If you remember, the stock market peaked at 1994.
Yeah.
Then we had that Amish shoes and CRB Capital.
Yes.
And the NBFC crisis at that time started, which was followed by the Asian financial crisis, which was followed by the Russia and the long-term hedge fund and all
Yes.
that collapsing. And then suddenly you had the internet and the boom in the IT services,
Right.
Y2K boom. But if you go back to 2001, there was, after the Y2K burst,
Burst.
the entire dot-com burst, then 2001 happened,
9/11.
happened. India had its own drought. Bank NPAs were very high, 13,
Yes.
14% NPAs in banks. So it looked like everything was going wrong.
Yes.
Suddenly everything was going right until 2000.
And we are only focused on the bad part. In the background, like you said, when we are sleeping, India is compounding.
And when the good is happening, a lot of good is happening. But when a bad is happening, also there are multiple things.
Right.
It is never one thing. It is this and this and this and this.
Sure.
So you need to build a resilience to that.
Right.
Otherwise, most people say if one thing is going wrong, if the rupee is going wrong, but everything else is okay, I can manage it. But the rupee will go wrong. Oil price will also go up at the same time. India, maybe the earnings growth will slow down. Maybe at that time, agriculture will also. Same thing happened 2002-3. It was very bleak. And then suddenly, after between 4 to 8 was the
India shining.
emerging market boom, India shining. India was doing well. Then 2008 again, same thing, taper tantrum also. So I've seen at least 5 or 6 very bad phases in India. And I think people who have been able to see the opportunity at that time. So one of the other things we train all our leaders in, saying a lot of bad things happen in business also. You make mistakes, externally bad things happen, but there is always some good in every bad. And it's a skill set you need to be able to see how to find an opportunity in that. So, something goes wrong in business, some client goes away, some employee quits, and we tell people, okay, I think this is bad news.
Yeah.
Now, tell me what is the good that can come out of this that you can see. And people struggle with it. You have to try
It's
hard.
a matter of mindset, how you're looking at it. Yes.
So, but if you can train yourself, because so even this crisis for India is good. Like the earlier crisis we had, balance of payment 1991.
Yes.
Even at that time, you see, I mean, if you look at 89, we had the VPC government fell,
many
and
of
the
them,
Mandal Commission had issues in India. Then in 2000,
Everyone who was in the queue was becoming PM.
and we are very unstable political
Yes.
government. Then after that, in 91, we had Rajiv Gandhi assassination.
Yes.
Then we had the Gulf War, the first Gulf
92,
War. Oil
yes.
price went up, balance of payment crisis, Harshal Mehta scam.
Scam,
All that
94.
happened. एक करके होते ही
एक के
गया.
पीछे एक, right.
But the economy kept on growing and navigating through that, and suddenly you came to 93 to 95. Markets were very good. Economy was keeping along. Then suddenly,
the Bombay blast.
after that, suddenly everything was going well. We started Edelweiss, and everything started going bad again. And then Asian financial crisis and all that happened. So the first 3 years of Edelweiss were very bad for us because the markets, environment, Asia, everything. Then the 2 years were very good. Then again the 3 years, 2001 to 3 was very bad. Then 4 to 8 was glorious. Then 8 to 11 was bad.
So
Then
what I sort of decipher is the good times are to prepare for bad times.
Absolutely. And the bad times are actually opportunities
to prepare for the good times to come, to sort of take advantage of the good times that will
Absolutely.
be there.
Yeah, and actually the bad times are the best time to strengthen a business.
Yeah.
People are available easily.
Yes.
Your cost can come down.
Come
You
down.
can do that. And you can actually, in a counter-cyclical way, is the best time to invest. When
Right.
everybody is going gung-ho about something, it's very hard to invest
So
in.
you would qualify yourself as a bull or a bear,
I'm inherently optimistic. So
Okay.
I don't like the bull or bear, but I would like optimistic skeptics.
but you see more value when the chips are down.
So that contrarianism is inherent in Edelweiss
Yes.
that we have,
Yes.
which is because, as I said, you have to look for opportunities. So
Opportunities.
even this phase, we are training all our businesses who say, let's focus on 2035. Forget 2027. 26, 27, maybe oil price goes up, this Iran war continues, things may be down.
Sure.
As you said, I don't know what will happen in the
Yeah.
next 8 months or whatever.
Yeah, I think the speed of change, which we call as volatility, and the unpredictable nature of everything, which we call as uncertainty, I think it's here and now every single day between all of us. So yeah, you don't know.
And in fact, here is the other contradiction of India. So, when in my MBA school, we were taught that risk goes up as the horizon gets longer.
Right.
The more short term, that's why your cost of capital is very lower if you borrow for 3 months, but it goes up if you borrow for 3 years or 5 years.
Right.
Because the longer the horizon, the more is the risk. But India is the opposite. I'm actually
I'm realizing what you're telling me.
I'm actually fairly convinced where India will be in 2035, but I don't know where India will be 3 quarters down the line or 2 quarters down the line. The next 2 quarters is the highest risk from ability to know where India is. Maybe agriculture, monsoon, rupee,
Yes.
oil price, anything will happen in the short term.
You can most safely call out to say that we will be 8 or 10 trillion by X period of time, but you don't know what's going to happen in the next 3 or 4 quarters.
So in India, actually, the
Amazing.
longer term is more stable. The shorter term is more unstable. So you actually should make more calls on the longer term.
Yeah.
And so at Edelweiss, we are inherently optimistic. We are not like euphoric or gung-ho bulls. We are also very skeptical. So I would call it cautious optimism is a norm. But
You're always on check in India. I mean, you cannot like relax and because it is you are dealing with the short term and you are planning for the long term. So no, phenomenal, sir. I mean, these are some very, very good things, but it also gives you a lot of hope of what is going to happen, because you only realize when you look back what, as a nation, as a country, as your business, that we've been able to achieve, navigating through everything that you've so beautifully put across. So thank you very much. Great opening. And I want to just, if in today's context, if we had to still conduct business and do, what are the opportunity areas largely in context of India?
So I think there are opportunities in quite a few areas, both in the hard asset side and the services side. There are some industries which are very capital intensive. So capital intensive, access to capital becomes a big entry barrier.
Right.
But I think consumer marketing is where capital intensity is low, and that's why we're seeing a lot of startups in that. But there is a lot of, in fact, I am getting very bullish on manufacturing in India.
Okay.
So the thesis is, as you look at India, and I remember about 30 years ago when I was in ICICI, I was actually in the export group in ICICI.
And it was called only ICICI. It wasn't a bank at that time.
ICICI, it was not even, it was pre the bank days.
Yeah.
And I was in the export group, and one of my clients was Infosys about 35 years ago.
Right.
So I was account officer, very young account officer for Infosys. Infosys was also a very small 100 people company.
Right.
But we saw the IT boom, and IT exports now are 240 $250 billion.
Right.
So now the question is, what is the next industry where India can get to $100 billion of exports? Because we need one more export engine to kick in now.
Yes.
Because whatever you say, because of AI, the growth of IT may smoothen down and all.
Yeah.
So we need another industry where $100 billion of exports can happen. We are starting to see exactly what we saw 35 years ago, some sporadic opportunities, and you connect the dots. It's happening in manufacturing. And the reason it's happening is there are two trends globally going on. Entire West, entire G7 countries, every country is re-industrializing. For 30 years, everybody said, let China do the industrialization.
Now
we'll do the consumption. We'll not manufacture anything, let China do all the manufacturing.
Yeah.
Now the US is remanufacturing, Germany is remanufacturing, Japan is So the reindustrialization has started because people have realized, if for nothing else, if there is a hot war tomorrow, ability to make steel, metallurgical capabilities are very required, which is what happened in the Second World War. The US had that capability.
Absolutely. And generally the world is more inward looking, so I want to be self-sufficient with everything. Yeah.
And especially on the industrial side, where people have hollowed out over the years.
Completely.
So it's also create jobs. It may not be the most efficient. It might be still cheaper to manufacture stuff offshore. But people are saying, I will still manufacture in my country for strategic reasons. So there is a 5-year trend on reindustrialization and investing in arms and ammunition. So everybody is upping their arms and ammunition investment and budget. Now, when that happens, a lot of I won't call it high-end manufacturing, but the mid-end manufacturing, especially where there are smaller SKUs, especially where you have to work with any metallurgical component. India is actually one of the best in working with metal, especially in small batches. So you go to,
and many companies.
You go to Hosur and Pune and Pimpri, Chinchwad and all that. You see hundreds of good companies, and they are all seeing 100% growth in order book. You go and talk to them, and they are all now struggling to raise capital. They will all come to the market. In fact, our expectation is next 10 years, there'll be at least 1,000 companies manufacturing
Wow.
which will IPO and list in the market.
Wow.
Because they will need access to capital. They want to grow, and all
Right.
these are still private companies. And same thing was true in IT. And 35 years ago, there were no listed IT services company.
Correct.
So I think manufacturing is, so if somebody were to start a new business, you are an engineer, you come out of there, you want to start a business.
That is the.
I think manufacturing to the global this thing. Of course, it will take its hard work and it will prove your credits and all.
Course.
But there are some great companies, and already I think the market is, because a lot of these companies, a few which are listed, also already trading at very high PE multiples and all.
Sure.
So I think manufacturing where there is steel and metal involved, working with metal is required. Manufacturing where small batch sizes are required, faster turnaround time, where refurbishment, refabrication, all that becomes important. India will.
And it's very interesting you say that. If you compare that IT cycle to, or services cycle to now, it's also the government intervention. They had SEZs at that time and giving benefits, and to have today, in a broader perspective, you have the PLI scheme, and the government wants to promote manufacturing. So also, if you sort of look at the current, at that time, the interest rate cycle was low, and generally, IT and ITES related or IT related businesses do well, and right now interest rate cycle is higher, so it's the more hard assets which are typically doing well. So yeah, I mean, you're great again. And again, if you look at the metal space, it again sort of power, metals, minerals, it ties up to the overall AI thing. I mean,
absolutely, AI will need a lot of because any electrical component also needs a metal. So I think AI will need a lot of electricity. It will need a lot of metal. So I think a lot of those industries will do well. So there are a lot of opportunities for new entrants to come there. I personally think so. 30 years ago, the best areas were IT and banking.
Yes,
those were. I think they have now become so large that the growth will be calibrated.
Right.
So I think manufacturing is one. In banking, I think now the shift in financial services is away from banking to capital markets and insurance.
Sure.
That is the next phase. So even if you want to be in financial services, let us say you have decided, I want to be in financial services, I think capital market, we are seeing growth of asset management, InvITs and REITs, and all those are coming. There is a financialization from it. So what happened, 30 years ago.
And what kind of yields on all of these? Anywhere between 6.5 to some of these InvITs are 9.5, 10%. So
10, which is actually better than bank deposits.
Yeah, phenomenal.
So I think, see what happened 30 years ago. So one of the other things we always see is customer needs keep on changing and evolving. So like 30 years ago, the need for Indian middle class was to save money.
Yes.
After 80s, first time people had disposable amount to save. So that is where the banking boom, the private sector banks came in, all that. I think about 8-10 years ago, saving is not enough. I need investing.
Yes.
And that is where we've seen the growth of mutual funds.
Yeah.
And so if you look at all the wealth management companies, because as customers have moved from only saving to investing.
Yeah.
So now I go from saving to investing. Now, but a lot of investing for the last 10-15 years was I need immediate liquidity.
Yeah.
Now people are saying, you know what, 80% of my assets are liquid, 20 can be illiquid. So we are seeing growth in AIFs, we are seeing growth in hard assets, we are seeing growth.
You have always been ahead of the curve.
So the customer needs are changing, and actually that is what I see. Whichever industry, so you said if somebody is starting, where we always say the best opportunities are when you can identify a customer need.
Wow.
So if you can constantly figure out, and it's there is an art and a skill and a science to that.
Yes.
But if you can constantly, and the biggest skill in that is a skill most human beings we all don't have, and that skill is called the skill of listening.
Wow.
We all have grown up, especially the more successful people grow up speaking a lot. You give answers, but a lot of the skill is in asking questions, not having answers. Then listening. So I think that itself is a good skill set if you want to identify customer needs. As a very young banker, I learned very early on that the best investment banking you can do is listen to the needs of the client out there. If you just ask questions and listen to that rather than go with your pre-decided pack. कि आपको तो M&A करना चाहिए, you should acquire some company. But when you listen to it, you realize the need is not acquiring company. The need may be capital raising. The need may be market intelligence. So very early on, you learn that you only survive if you listen to client needs. And that is also a skill set that is not easily available. We are all very product centric. We make a product and we want to go to the client.
Right.
But it should be more need-based creation. So you go and understand what the client need is, and then try to create an offering around that. So like the client need could change from investing in India to investing outside of India, which is a lot of the high net worth family offices are wanting to invest out. So if you listen to the clients, you'll find the needs are there. So the customer needs in finance, which is where we are, is currently changing from saving to investing and from liquid investing to illiquid investing.
Got it. Little long-term view.
And same thing will happen with insurance. And that is same thing happened in the US. That is where all your Blackstones and KKRs and Carlyles and Warburg Pincus's came about.
Absolutely.
Where they were offering illiquid 8-year, 10-year funds, but a higher return. So people are saying, if I get more return, I'm willing to be a little bit illiquid on a little bit of my money.
Got it. Rashesh Bhai, I wanted to ask and understand, where does and how does AI impact us? I mean, there is, of course, the two sides, but we're clearly not on the right side of the capex cycle of AI. And then, of course, given the whole overhang of services and the impact that it could have on job creation or the loss of it, where do you see India with respect to the AI cycle?
So I think there are 2 or 3 opportunities in this also. And I don't completely agree we are on the wrong side of the AI capex cycle, because a lot of capex has gone into LLM creation where we are not there.
Right.
But you don't have to be in LLM. I think there is going to be a lot of computing, data center, power generation required.
I'm saying in context of what's happening to South Korea, Japan, Taiwan, and the US. We're far from it.
So the first capex cycle started with LLMs.
Yes.
If you go back and see. Then it moved on to computing chips and memory, which is where we are now.
Yeah.
So the NVIDIA, Samsung, Hynix, TSMC, it has gone to chips. Now we were not in LLM, we were not in chips. The third one will go into infrastructure, where we'll create large computing infrastructure, data
centers. What's happening in Vizag and Bombay.
So that India is not behind. India is already, and we have renewable power. We have a lot of ability to generate solar power. In fact, the problem is not going to be capex opportunity in that. Now, if you are not in the first, you can be in the second. It's like if I go back and see the IT revolution, India was not making computers.
Yeah, and we didn't innovate.
And we didn't make package softwares. So we didn't make the computers of those times, the IBM and the Compacts and the Dells and all, we didn't make them.
Absolutely.
Then came the software where the Microsoft and Oracles and SAPs came in. We were not also there. But we were there in the third cycle, which was the IT services, the application development, maintenance, coding, quality testing, all of that, we were there. So here also, even if you're not in, because this kind of cycle, if they are truly as long, there will be parts of the value chain where India can capitalize on what our strengths are. Ideally, yes, we should have semiconductors and chips and all, but we are where we are. I mean, today India should be a $20 trillion country, but we are not. We are where we are. You should remember, the US is a 250-year-old country. We are only 75-year-old country. And in fact, what we are still battling is, I came across a very interesting statistic, not related to this, but for the 150 or 200 years of British rule, India's GDP grew at 1% per year. Now imagine for 200 years, you have grown at 1% per year. Your population is maybe growing at 2% per year. Right. Which means your per capita is falling by 1% every year. For 200 years, the compounding compounding ka ulta hota hai. We all talk about compounding, how to create wealth, where you accumulate. So it's an inverse compounding where you are losing 1% every year. So in 1947, we had truly been hollowed out. Correct. Our economy had truly been hollowed out.
And I think with the overhang of that, we chose the worst combination to be democratic and socialist. I typically would be democratic and capitalist, but with what happened to us with the 200 years of British rule and the inverse compounding.
And you can argue India was so poor that capitalism was maybe not an acceptable option when we got independence. But I don't know, you can do a lot of counterfactual thinking. Yes. But we were where we were. But I think we are only 75 years old. And there are parts of me which says, in 75 we have achieved quite a bit. There's a lot we have not achieved. And as I said, same contradiction of India. India is always going to be a glass half full, half empty. I don't think we'll ever get to a stage where we feel everything is great. Right. But if you go and study the US also over 250 years, they had a civil war of almost 80, 90 years after their independence. So countries go through an evolutionary cycle. So we are where we are. We don't have to be in everything. We have to play to our strengths. So I think there is a lot of opportunity for India. We have to get our act right. I think we have to get manufacturing right. We have to deregulate the government. What has happened last 8-10 years, our fiscal policy has been slightly tighter inside because the government has been careful. Our monetary policy has also been tight, and our regulatory policy has been tight. We have only tightened, everywhere. So this three tightening, fiscal, monetary, and all, has somewhere brought the growth down. It has cleaned up the system. NPAs are down. All that is there. But because we slowed down the car so much, the car has got petrol, has got all that, but the car has slowed down. We need to start the car again.
Yeah, I mean, in simpler terms, what you're trying to say is that when the sales are at its all-time high, there are compliance-related issues, and I think that is what was happening to the country. And we have the head of compliance has become, is running the ship in that sense. So you become so tight now. You got to loosen the guardrails, to for the growth to really again propel in some ways.
And you need a little bit of animal spirits. 35 years ago, when we had the balance of payment crisis, we deregulated and it unleashed for the next 10-15 years a lot of growth.
Got it.
So I think India will get there. One of the reasons India is stable in the long term is we are fairly self-correcting as a country. We do correct ourselves.
Good institutions. I mean, the positive side is if you look at the world today, Obama, Trump, Biden, and then Trump again. If you look at the United Kingdom, I don't know how many, you can't even count the number of prime ministers. Most of European countries, most of the developed economy, India at least has had a stable government, because I've read somewhere that social instability leads to political instability, leads to economic instability, because you want to then deal with the social instability, which is going to change. You will have change of governments. But that is, I think, a bright light generally across parties that we've had a stable sort of government and environment. And again, just going back to AI, you think that we are going to have job losses to the extent of what is getting painted?
Jobs will get changed. And as I said, I think it's like what happened with the information revolution, all that. So I think jobs will get changed. Maybe the earning powers of jobs will come down. Of the jobs where AI comes in out there, partly productivity will go up. But for India, AI will be a good thing overall because see, we are still in the early stage of our development cycle, and our cost of development comes down because AI will be disinflationary. AI will bring cost down. So to put up a new road, there will be a lot of AI-based, data-based you can do. So cost will come down. So I think in that sense, the disinflationary part of India of AI will allow our development to happen at a lower cost. There will be job losses. But
in fact, it's going to be great for a country like us where you are dealing with so many, like, your court cases are piled up. AI brings and, it makes it more efficient. I mean, many areas.
It will like UPI suddenly allowed us to leapfrog.
Yes.
So there are many areas where India will be able to leapfrog in an affordable way going forward. But there will be job losses, but they will be all over the world. They won't be only in India. So I think the other problem is India still always had an underemployment problem. We still have too many people working in the farms and not getting remunerative wages. So our problem was always there. It might get a little bit worse, but I think that India's growth will absorb that part. It's not that we had 100% employment very well, and now suddenly 20% of that is going to come away.
Got it.
So our problem will remain the same. It will change on color.
We are equipped to deal with this. We've been dealing with this.
But it will always be what I would say a very chaotic adjustment. So India, there will not be one very monolithic, clear-cut answer. It is always a little bit of this and a little bit of that kind of an answer. So we'll feel unsatisfied. Why don't we do something decisively?
You have, the great part of this conversation is that you nailed and explained India, that you really have to be there to participate because the growth is happening. There will be these things which are there here and now, which are going to be difficult. But if you're able to navigate that, you're willing to do it. And then there's history and the stats and numbers. On the AI piece, are we looking at a bubble? I'm saying globally, with whatever the amount of money that is going in, the amount of investments and, the round sort of circular sort of cycle which is going on, you're aware, and what do you think around it?
So it is I was going to say the $1 million question, but nowadays million is nothing. So not even a billion. It is a $1 trillion question. There are elements of bubbleness, but the AI investment is also real. There will be $1 trillion of investment that will happen. So there are two kinds of bubbles. Bubbles which are completely in the air, and you look at the what is called the South Sea bubble or tulip bubble, which were created unproductive bubbles.
Right.
While if you look at the internet bubble, the dot-com bubble, they
It
were productive
created a
bubbles.
lot of-
The
yes.
earlier railroad bubble in the US,
Yes.
they created, I think this is going to be, if it is a bubble, it is going to be a productive bubble. It will create a lot of productive assets. It will really transform the way we work, the way we, live our everyday lives. So it's going to be a transformative impact. That is true. AI is real. AI is going to create a lot of productive capacity. A lot of investments are happening. There will be elements of bubble, but that has been, I think, greed and fear has been hard-coded in human beings for 5,000 years. The markets are maybe only 100 years old.
Sure.
But human beings for 5,000 years have swung between greed and fear.
Right.
So that greed and fear will continue. The exuberance and overcautiousness also will continue. So there will be elements of bubble. But I wouldn't worry too much about that bubble. In fact, there will be good things for India, because if the AI bubble
I really believe what you're saying, and I feel it now. You're saying that it will make life very, very easy. I think not being there is not great, but I think it's eventually going to benefit, because it's going to make things efficient, and efficiency is something which is needed for. But one last question on AI, and then I want to ask you a few things on your personal side. Today, we see that there's a lot spoken about job losses and productivity. Seldom do we hear that the revenue has increased. That 100 has, I'm not hearing, if you look at anything that you're hearing, 100 has become 125 because of, but the cost, if 50 has become 40, and that is translating from, job losses, etc., or human capital costs reducing, etc., right? The cost of AI aside for the moment, are you really seeing that 100 becoming 125?
So I think the world is in a slow growth era.
Right.
So that is a given. And any transformative technology, so I don't think any technology changes the real growth of the world in that sense, because the growth is impacted by so many other policies, political, social, immigration. What the transformative technology does is it rearranges the value chain and the profit pools. So like what happened with Google came in, a lot of the advertising revenue moved from newspapers to online. So it's not that advertising has gone away.
New leaders.
It is, but it did take away the ad revenue of the newspapers. And the newspapers have gone down, while the online media has. So it rearranges the profit pools and the value chain.
And that would horizontally increase, not necessarily vertically.
So the top line will not grow, but the profit pools will get rearranged in a very significant manner. So as an investor, you also want to look at the profit pool. You don't want to only look at growth. Because as I said, for the last 40 years, India's growth has also been in that. Even global growth has been 2 to 3% GDP. And with all this, I think reinvestment in own country and all that, which is not most efficient, I think we are in a slow growth era. And the world is in chaos, because a lot of the countries in the West have never embraced it's okay to grow slowly, because and that is the angst that is there, because the slow growth is actually creating a lot of heartburn. Got
it. Rashesh bhai, quick, your view on real estate. I mean, this is a real estate sort of podcast. A quick view on what you see about real estate, resi, office, your choice. But I mean, you are everywhere. You see it better than anyone else. So
obviously, real estate has always been one of the biggest asset classes. We don't realize, but I'll throw one statistic at you. India's household wealth is now close to $24 trillion. About 11 to 12 out of that is in property, land and homes. So another 5 is in gold, by the way, which is higher than the stock market cap of India or the GDP of India. But India households have 11 to 12 trillion dollars of property. They have another $5 trillion of gold. So India has always had exposure to real estate, but it was more informal. It was not as monetizable. It was more illiquid. I think parts of the real estate will now have started getting formalized and monetizable, and what we're seeing, REITs and AIFs and all that coming up is that part of that people will slowly say, I don't have to own my own real estate, I can buy a REIT. So I think the real estate is now becoming a capital market asset. It was always a household investment asset.
Zamindars, Maharajas, Sultans, Emperors, kitni zameen hai, kitna sona hai, what is my extent? That is what wealth was always.
So actually, that is the second part. One of the unique things about India, which is not common to many parts of the world, is in India, land is still very precious.
Yes.
It's not the same everywhere in the
Everywhere
world.
else.
Because in India, land is still a store of value.
Yeah.
And that is partly the shortcoming of our financial system. All of us have failed to, because land should not be a store of value. It should be for utility value, not as a store of value.
Right.
Same thing with gold. Gold should
Yeah.
not be a store of value. It should be utility value, because if that store of value comes into the market and becomes monetized, then the productivity of that asset is a lot higher. So in order for the country to grow, we have a lot of unproductive wealth that has been there. We have to make it productive. So I think this entire recycling and monetizing and all that will be a good thing. I think we have had an equity market that have grown, but now we will have real markets, real assets market that will also grow, and real estate will play a big role. I think commercial real estate, including hotels and malls and everything else, and we'll have newer and newer kinds of real estate. So from a capital market perspective, I'm very excited about real estate. I think it is a growth industry. The problem is it's still, after RERA has come, things have become a lot more cleaner.
Yes.
But it's still not a financially robust industry. Most of the project have very small equity component. There's too much borrowing, too much. That's why we see boom and burst out there. Right. I think land buying is still very murky.
Yes.
It's very opaque. So there are a lot of those issues are there. But if you solve a lot of that, I think real estate for the next 20, 30 years could be a very big asset class in India.
Got it. Rashesh bhai, we are on time, on clock. So I'm going to end. But you want to give us some tips on running?
No, I think it is each one to himself or herself, I would say. But I do think that some amount of activity, you need to move. Whether you walk, whether you run, whether you swim, whether you do yoga, whether you...
When did you pick it up?
I started running. I used to play tennis earlier. I got injured, so I started running 2008 onwards.
Wow.
And it's been now about 17, 18 years of running, and I'm actually now learning how to run properly.
Wow.
So it's been amazing that now I'm enjoying running. I've improved my running, a lot of things. But it's a hobby. So not everybody should have running as a hobby. You can have whatever hobby. In fact, one of the things I say is that I came across this, that the human body, the automatic reflex, the default option is to be still, and we have to work to keep it in motion, because that is what keeps it in a good shape. The human mind is opposite. The human mind is always in motion. You have to work hard to keep it still. So I always say spend about 15, 20, 30, 40 minutes a day, out of which 30 minutes on keeping your body active and 8, 10 minutes on keeping your mind inactive.
Super, super. On that note, I'm going to end, and I have to thank you. I mean, there have been, what I've got today is hope, knowledge about mind and body, knowledge about how India is going to continue to shine. It may be, we may be faced with the challenges today. Just phenomenal and amazing.
Thank you.
And,
thank you very much. Really enjoyed it.
For taking the time. Thank you.